So yeah, as long as you guys understand that, CPI is Consumer Price Index, PPI is Producers Price Index, PPI is the future CPI. CPI, when you see a CPI come out like yesterday, it's basically telling you what the last month was in terms of data, in terms of reports, in terms of inflation, housing, gas, oil, and everything that you could think of. Real estate, rent. It calculates everything. Exactly, Danny. The PPI will always drive consumer price index. So just from us looking at this chart right here, we can obviously see that once 830 was hit, the whole entire market started getting very quick to the upside. Meaning, in terms of the run that you had on CPI, which was over here yesterday at 822, and then let's look for 830. So from 830, you went from here straight up to this high up here. Today, so far, as you all can see, in terms of the flow from 830, right? Let's make sure it's at the same time. That goes a little bit over. That goes a little bit higher. So it's about the same trend for CPI and PPI for now. Which is kind of funny because, I mean, you just ran up to a previous high point, which was from pre-market and after hours. And then today you're pretty much heading up to yesterday's midpoint. Well, not really the midpoint, more so the bottom point. The midpoint of yesterday's price action would be all the way up here. It would be right about here, right around 624.20, which is kind of funny because 624.20 is the weekly 1/4 point. So because this is the weekly 1/4 point, yesterday we played puts going back down to the 200 on the 5-minute. The day before that we played puts from beneath the 200 moving average, and then the day before that we played puts way below the 200 moving average. So we played puts here, we played puts in the morning here, we played puts in the morning here. So again, puts in the morning could be a good idea right now, but since we did it 3 days in a row, we might have a problem here with these contracts. The only reason why I don't feel like we're gonna have a problem here is because you're next to the purple. So as long as we reflect off of the purple, I could easily see this falling down to 623, if not 622, 621. So that's all I want to see right now, is you hit the purple and then fall from the purple to the yellow. That is the goal for today. We're thinking the market's going to fall out the sky. Kind of seems like you already did something a little insane. Now, if the market's going to hold and start running upwards, as you can all see, just like I told you yesterday, you fell down to 621 because you were below this line. So now if you hold this line here, it's right below us, you're going to run up into 625 and then all the way over here at 628. And then you could continue to run up higher, touching this line, maybe even this line. So we want to see if this is going to just respond to the weekly lines as it was doing so this whole week. Because look at this. Pretty clean touches nonstop. So again, everybody, my first thought right now is puts at open. Puts at the open. They just might be a little dangerous since you're not at the high. That's the only reason why you want to avoid getting too many puts or avoid doing something that's just too insane. This does look like it's going to still run up higher. You are tilting though, yeah. Then again, if it just stops here, looks like you're getting like a U shape. Let me see. Let's look at one more chart. Hit the bottom here. You're in between them here now. If you fall, you're going to fall straight down to 614, 615. Okay, so again, everybody, we're looking at puts at open. I want to see if this is going to hit the purple zone. So I want to see it go up a tiny bit higher than where it's currently at. That's chart number 3. Okay, so the 619 puts are basically around $16 here. Okay, so I'm getting into the 619 puts here. Coinbase is up a crazy amount right now. $50% on that Coinbase. What in the world? Wait, let me see something real quick. If I could sell it for profit here at 50%, we could just rebuy the Coinbase. Let me see. Does it let me sell for the midpoint? No, it doesn't. See? Every single time you put your order closer, the bid and ask just retains itself here. So yeah, we're just going to leave this alone. We're not going to worry about this. Beautiful little drop here, everybody. Absolutely beautiful drop. You hit the quarter point. You hit the 1/4 point of the weekly so far. So let's go ahead and now put our trading style on the screen here, which is the reversal points, of course. Your trade is up right now, so if anybody got some 619s, you're going to be up. They cost around $15, $14, and they're already at $20. So again, you could put your stop loss here. If you're looking for the market to fall out the sky, of course, you would not put your stop loss. You would just be waiting right now. You want it to fall down to at least number 2 on the reversal points, if not number 1 on the reversal points. So far, you just fell down to number 1, ran up to number 1, and you're stuck in between them. We're going to give this market a second. Let's see if it's going to run up. Every time you're up, just put your stop loss. Take profit. Let's see if we're going to run up a little bit higher here. Remember, the purple zone is exactly what you smacked into before you fell out the sky here. So we were correct so far about the market wanting to fall from the purple. Let's just see if it's going to consolidate around here for a second. So first idea so far is good. Again, let's give it a second. All right. Let's see if you're going to run up to number 1 on the reversal points real quick. You did an equal reaction. So if you do an equal reaction, you're going to fall straight down to 620. Let's see if we can buy a 620 option here. $620 puts. That's wild. Those 620 puts went from $19 at open straight down to, or straight up to $30. 19 straight to $30. Instantly within those first few seconds right there. If you pass number 1 on the reversal points, you could of course fall out the sky. So that's the one thing you're looking for. You want to see if you're just not going to be able to get above number 1, or you just fall down to the next number 1. In terms of gaps from last night, I don't think it's going to mark anything as a gap, honestly. Oh yeah, it does. It does. So you just have a tiny little gap here. right? Right around here, 170. Oh, that's NVIDIA. My bad. SPY, you have... Yes, you do have a gap. You have a giant gap. So again, we're going to play for half of this gap fill. That's the first thing we're going to do here. Let's see, can we buy these contracts at like $12? Remember, you're on the 5-minute. Once you get below this red line, you can continue to play downside. Let's just be very careful. If it's just hovering right next to the top of it, you might just hold and potentially run up just a tiny bit higher. Just a little bit. If not, you're just going to go straight down, just like we thought yesterday. Watch number 1 on the reversal points. And watch the purple box here. So far, everything is reacting properly, just like how we wanted it to do yesterday. So far. Let me check something real quick in terms of your diagonal lines. The lines that I'm referring to are these right here. Yeah, you're still at the bottom. Half of yesterday's price action was also at what level again? I already forgot. It was at, yeah, 624.16. Straight down to 622.85. Let me see. Remember, you have this gap from last night. It's not starting to fill a single thing of it. You filled a little bit since you opened, of course. You opened up a little bit higher than here. But okay, so I'm trying to pick up some 620 puts. The reason why I want to pick up some 620 puts is because for now, the equal reaction is going to be from you falling from this 1/4 point to this 1/4 point down here, potentially even lower. If we can grab a 622 put, of course it would be better. It would be way better, honestly. 622 is literally right there. Only problem is these are a little bit more expensive than normal. They're around 50 instead of the $16 we've been, consistently trading every morning. Remember, every single time it runs up to number 1 on the reversal points, or a little bit higher, reversal point number 2, you can start looking at the put side. There you go, everybody. You're below number 1 now. Let's look at the purple zone. You fell from this zone so far, straight down to this next zone, right next to the midpoint of it. The quarter point is going to be right down here. All right, everybody. So you can start putting your stop losses now. You can start moving them up. Just in case, right? Oh my God, I almost just snapped the desk. Oh no. Still haven't hit the 200 moving average. Now you're filling it, and now you should be filling this gap here. Half of this gap is going to be filled at exactly, ladies and gentlemen. Half of this gap is going to be filled right down here at 621. You could do what you did with CPI last year. Last year around the same time with not CPI, PPI, not PPI, FOMC. Remember, FOMC gets released in 2 weeks. Now 13 days actually. It's no more 2 weeks no more. It's just 13 days now. All right, everybody. So I would just say, just be very careful here. Be very careful here. You all can obviously see this uptrend. If it holds this, you're just going to start running up into the previous high. Now, why would you want to do this on SPY? The reason why you might just run into a previous high on SPY is just simply because if you look at that same chart I was showing you, this whole entire week, you've been basically sitting at the midpoint and running up to the top. Right now, you're at the quarter point, and you're potentially falling down to the midpoint, which means if you get below the midpoint, you're going to fall straight through it, straight to the next 1/4 point. Now, the problem we have here is, again, this is an uptrend. Just like I showed you with this screen over here. You might just hold. I could definitely see you running up to 626. However, it looks like the market's just a little bit more bearish than it is bullish right now. So we'll have to see exactly how they're going to fill you here. You're stuck in between number 1 and number 2 now. Jinx, what are you doing? Tesla's going sky high. We're going to wait for Tesla. Just due to the fact that CPI came out yesterday being negative, market took it as bad, market fell from the sky. I'm thinking PPI is just going to generally pick you up. So far, I did give you the opposite reaction, right? So far. Besides you opening up and falling the same way CPI did, you have the same reaction with PPI. The 626 calls went from around 16 to 22 right now. So the calls are still moving up very nicely, honestly. Every little flick that you have to the upside here, those calls end up going up 5 to 20%. How's the puts here? Okay, you feeling more of the gap now, everybody? Okay, you're at the 1/4 point now. Where's the halfway point? Right down here. Weird ass weekly fill. $622.14 is going to be right next to $622.14. Reversal point number 2. Okay, everybody, you filled about half of the gap so far. Okay, so I bought some calls here for 626 real quick at $14. So again, I bought 626 calls at the midpoint right there. Let's see if after it fills half the gap, is going to run right back to the top. If we just simply fall below the midpoint, you could just stop out. You might have another opportunity to get into the calls here. Again, you're also at the weekly midpoint. So let's see if there's just going to be a little flip here. If you continue to go below this, just stop out. You're also at perfectly number 2. So far, it's holding on it. What in the world are you doing? This cat's going crazy. All right, let's take a look at some of these other charts here. Okay, so for these options, we're trying to sell them out at around $34 for the 626s. That's the goal for them. Because remember, the goal for the price action right now is to honestly see if it's going to hold at the midpoint of the range, if it's going to hold at the midpoint of the gap, and if it's going to hold at number 2 on the reversal points. And we want to see if it's going to be able to at least flip to the upside. If it can't and we just flip below this midpoint, that's okay. We'll just take a little loss here, and then we'll move forward. We bought these contracts at their ultimate low price, and they're still at the low right now. So again, we'll give it a few minutes here. Usually number 2 holds for around 15 minutes. So far this is the 10th minute, right? Actually, no, you could say this is 5. You might have 2 more candlesticks here where we have to wait for them. And then we'll see if this runs up to 623.29, which is the first reversal point. If you just go straight below number 2, you're going to fall to number 3 and then number 4. You got that, everybody? Number 3 and then number 4. Okay, I rounded it off now. Okay, slightly going below number 2 now, everybody. So again, you weren't holding on top for 15 minutes, so the next thing you're looking for is a touch of number 3. So we're just going to be patient here. We'll see if you get bought up on top of number 2, or we'll see if you're just going to flop down to number 3. What are you chasing? So remember, the first goal is to hold on top of number 2, run to number 1, run to the opposite number 2 right around 625, and then we want to sell out these options before you even hit 626. Street 33. Around 35, I would say. $35, $36 is what I'm thinking. But probably like 20, 26 would be the where I put my stop loss. Once we hit $26 each contract. So yeah, we'll just wait for a second here. Let's check some of your supply and demand zones here real quick. Holding on one zone. You're about to hit the next zone. One thing we could also check is CS zones. Again, this midpoint is everything, everybody. This midpoint is everything. Once we get below it, we'll see if we can continue to play more downside. It's a very important point. It's your weekly midpoint. All right, everybody. You're still at the bottom. You're still holding on number 2. If you get below number 2 now, you're going to fall straight down to number 3, which is 621.64. Once you get to number 3, we could see it hold potentially, but at that point, what I would want to be seeing now is you just fall straight down to number 4. Okay, so you're at number 3 now. In terms of the gap, looks like you're just repeating the same exact thing as the whole entire week, which is to fill half of it, to potentially fill a quarter of it. Once it fills the whole entire thing, we'll be seeing if this market's just going to, return right back to the upside. If not, we're just going to continue to play downside for the rest of the day here, just like yesterday. You could probably see it bounce a little bit at the bottom, right, to the midpoint. And then after that, we're going to wait and see if this thing is just going to fall out the sky and potentially start falling to maybe 618, 617. Like right in the middle, you could say. In terms of the puts, just make sure you're moving up your stop loss with the flow. 5, 10, 15 minutes. So it took exactly 15 minutes for it to drop to number 2 once it hit it. So it's still working out perfectly in terms of like your 15-minute little block of time. It's still working out. So it's pretty nice to see. You guys want to write that down and make sure you have it on the chart. Okay, so now you're below 622. You practically did an equal reaction from where you were above, as you all can see. So same thing like yesterday. Once you got below it, let's go here and measure it. If you take this box, put it right on top, you would see that the market was more bullish than it was bearish once PPI came out. So PPI did change the market a little bit here. That's the reason why we're focusing on the calls so early at number 2 and 3 instead of 4 initially. But again, if it takes to number 4 for it to actually fall and hold on something that's a little bit more dramatic, I could see that happening. Now, what we're looking for is not just a jump to a high. We're basically looking to see if the trend that we thought could happen yesterday is going to actually occur today. Now, it might not occur perfectly, which is you basically running into a crazy 630, 640 high. But what I could definitely see is you just playing around with the 200 moving average. And that's all I want to see right now, is you just generally shift above the 200 again and then potentially go right back below it. But we'll see. We'll see exactly how this flow takes over. And then, yeah. After that occurs, now you guys know my plan. Now you guys know the reasoning. The next step is actually building a plan for tomorrow. Just from how the price action today's occurring, around the 200, around the EMAs, right? Around the midpoint of the week, the 1/4 point of the week. So I want you all starting to document everything now. So once it hits 12 o'clock, we're going to go ahead and post our next plan here for like our little set of notes that we started building earlier. You guys remember it. And then, yeah, that's pretty much all I want to do from here. All right, so looks like you're slightly holding around this area here. We'll see if you become more bullish. If you do, there's an opportunity for you to run all the way up to 626 and go in the money. If these contracts go in the money, again, if they go in the money, we're going to be selling each one for around $80 to $90 here. So it just depends how bullish you get. If it's just to number 1 or 2, we're probably only going to be selling out for like 100%. That's pretty much it. which is good enough, you know. That's part of the challenge. That's all we need to do. So as soon as we hit 100%, we're going to put our stop loss. And we're going to move forward. If you guys still want to hop into the put side, because of course it might be more bearish than it is bullish, we're just going to give it a second here. Let it get below 622. And then what you guys could do is you could play puts exactly for 621.05. So you could see this market pull right back down to this line here. And that's where you want to focus on puts first. It could fall to 620. But again, you want to focus on the first possible thing so that you're basically instantly up. That's what you want to focus on. And just be very careful with this line here, 622.14. In terms of, again, if you guys forgot what I said earlier, why 622.14? It's just generally because it's the midpoint of the week. So it's your weekly midpoint. In terms of supply and demand zones, you fell straight down to the midpoint of the purple and the yellow. So now we're running up to the quarter point, as you all can see. If you can't get above this quarter point, you're just going to fall down to the next quarter point down here. So that could be possible. But again, I want to see if this returns back to the purple and then gets slightly above it. So you hit the quarter point and you fell from it so far. So you could be pulling right back down to the new low, which is this quarter point down here. If it continues to be more bearish, just like how it is right now. So again, everybody, you could fall straight down to this next quarter point, which is going to be 620.39. That could be what's next up. Another thing I can show you is basically the flow from last week to this week. So if you look at last Wednesday, which was, where was it? Wednesday. Okay, so last Wednesday, you had a dramatic uptrend where it then fell out the sky into a new low and then slowly ran up the whole entire day, basically. The Wednesday before that, let's go ahead and look for it. So remember, dramatic uptrend, and then you fell down, then you ran up again. That was the last one. The one before that was just a dramatic uptrend. Go to the next Wednesday, Thursday, Wednesday. This Wednesday, you basically opened up very high. You fell down to number 5, and then you returned right back to number 1. So this Wednesday was, of course, bearish. So that's 1 out of the last 3. We'll go to this one over here, which is this Wednesday. This Wednesday, you had a nice downtrend, a dramatic uptrend, dramatic downtrend, uptrend. It was just all over the place. So this one, we'll just say it was uptrend. You did end off red. However, we would have gotten out of everything. So let's just go back to the next one. That's 4. 3 out of 4 were green. One of them ended, you could say, red. This one over here, you have a crazy uptrend pre-market, gets shut down, hits number 2 and 3, returns back to number 2 and 3, and this is pretty much what I'm looking for. This was 5 weeks ago. And then this Wednesday over here, same exact thing, dramatic uptrend. You get shut down, dramatic uptrend, and you get shut down again. So you get the point that I'm trying to make here. That's what we're looking for. Now, if you get below 622, we'll just continue to play the downside. That's pretty much what rounds everything off again. So again, If you get below 622, you see how you keep falling to this midpoint and holding? Just keep watching this area. Is it still holding on number 2? Yeah, it's still number 2, unfortunately. Just killing all the price action at this point. 622. I think we're going below it now. Oh, just wanted to smack on top of it again. Spy's playing whack-a-mole right now, huh? Just apply the damn money. Buy in. We gotta wait for big money here. So far, it looks like, again, they wanted to just fill half of the gap. You wigged into the next portion of it. However, if it just keeps holding on the halfway point like this, you're just going to turn again. Now, the reason why I thought they would do this is because they did this 2 weeks ago and last week, where they keep creating gaps, but they leave a portion of it for you to fill later on. Meaning they don't want to fill the whole entire gap right away. So I've noticed that they leave like a small little portion most of the time. It's usually not half of a gap, but I've seen, like if you go back into the chart, you could definitely find moments where half of the gap was not filled, only a quarter, and then it continued to run up higher. Now, I'm assuming since it's filling all the gaps now, it's just telling me that the market is becoming more bearish, which is an obvious statement, of course. We're looking for more downside than we are upside, which is correct, of course. However, since today's a news day, news days tend to accelerate things in different directions sometimes. So until you get, half of the day to kind of happen, or 3/4 of a day to happen, you can't really put your thumb on exactly what direction they're trying to pull you up into. Like they basically make you trend like an accordion. Now, catching these days and understanding when these days can occur is the hard part. Usually it's around Wednesday or Thursday. So Wednesday and Thursday, we try to see if we can, play with the consolidation if the market wants to do that. And you falling down out the sky, hitting number 2, if you just run right back to the opening price, everybody, I'm just letting you know, today's probably going to be a consolidation day. Just because you did that. So, yeah, we're basically trying to forward, think in the future in a certain way, in a certain manner, right? And at the same time, try to see if the potential is just still there. Because if it just wants to go up higher, and it might happen tomorrow, which could be the case, you might just be lagging around here, you know what I mean? A little bit. Meaning, you might just be wanting to kill value up and down. So we'll see if it gets above the 200 here. We'll see if it gets above the current gap area and sends you up into that same opening price, if not the next high. And then we'll see if we're going to sell our plays around there. Maybe we put a stop loss around there. That's also going to be around the purple box, which is resistance oftentimes. So if you hit this purple box again, you might fall out the sky again. I'm just letting everybody know. If that's what the market wants to do, is put you right back to the top here. you could just once again fall out the sky. If it wants to fall out the sky now, that's perfectly fine, of course, so be it. Just wait for it to get below number 2, which is right around, as you can all see, number 2 is right around 622.21. So once you get below that, I'll give you the okay to continue to play puts. If you just hold at this area with the CS zones looking like this, you're just going to go right back to the top is what the CS zones are telling me. That's what these look like right now. So basically what I'm trying to get you all to understand is that I had a certain idea with one of the strongest trading styles that we've ever created. It basically lined everything up. It was the final just cherry on top, in my opinion. Again, we still had to wait for this trade to develop. We still had to wait for the day to progress. But yeah, this is going to turn into something potentially even more insane than yesterday. It might be literally what I thought yesterday was going to be. Because that's what I hate when that happens. You know that? Even me, it happens to me all the time. Where sometimes I have an idea. But maybe because I'm rushing certain portions of the idea, it just doesn't, like, how do you say it? It just doesn't happen that day. It happens like the next day or the day after. So what I've realized and what I learned, even, you know, now, last couple months, last couple years, is you can't stop applying the pressure. Every single day you have to apply. If you have an idea, you have to apply the same pressure the next day. If it doesn't happen the first day, see if it happens the next day. See if it happens the third day. If 3 days, 4 days in a row it still did not happen, it just might mean that you were thinking about the wrong direction. So you would then go back into the drawing board and then just potentially see if, you know, there was any other possibility that you could have basically just chose. The only thing that can mess up this trade here, again, is going to be slow moves. So exactly what we're getting right now, this is the only thing that can mess up the idea. Let's see if it's just going to run up. And NVIDIA, what is NVIDIA doing? NVIDIA, what direction you choosing? So NVIDIA looks like it might be falling out the sky here. You might be falling down to the 200. You might even get beneath the 200 today. Straight down to 163. So we'll give it a second. Tesla, are you still running up on Tesla? So Tesla, you already stopped. Looks like you're hanging by this little top portion here. Looks like you have a nice little downtrend from like here to here. Intel, I wanted to check Intel. I just remembered. Intel. Where's the semiconductors? So I was looking at Intel pre-market, and I was just like, it looks like it's about to jump again. Looks like you're already slightly getting that run up right now. Again, for Intel, we want to see if this thing is going to be able to pop to 27. That's the next goal right now. We are going to buy more plays, but before we actually buy more plays, we want to see if this thing is going to fall right back down to potentially a 21 low, if not 20 low. If it happens, it happens. If it doesn't, you'll just run straight up to 27, 25. So yeah, we're just going to wait for that. Let's see. Too much price action here. Way too much price action here. We'll give it another 10 minutes. $2.50, which would mean, let me see. $624.90. We'd probably have to sell out of everything. Just off of the current flow right now. So right before number 2 is where this market's saying it's going to potentially slow down. Because you still haven't reached slowdown point. Your slowdown level still has not occurred on SPY. Usually when this amount of, dollar for dollar amount occurs throughout the day, the market just slows down. So far, you're like right beneath it. Usually that's the case when you hit number 2 and 3, is you're basically right beneath that slowdown point. So now the next development of you wanting to slow down today in terms of the price action, it's either going to occur when you get beneath number 3, or it's going to occur when you actually flip to the other side of the board and you hit around number 2. Again, this could still be a trend that's going to develop tomorrow. So we're still going to trade the same idea tomorrow in terms of testing this upside. And then once we get that final bit of upside, then we can continue to play the downside. Because what I'm thinking is, since we have CPI and, not CPI, but FOMC in 3 weeks, no, 2 weeks. So basically now 13 days. So since it's in 13 days, you're going to get 2 different trends. One trend is basically going to make you drop out the sky, go into a new low, which is probably not a low that we're at right now. We're probably going to go lower than this. I'm talking about like 615, 613. Or you're going to get the other FOMC trend that you usually get, which is a trend where you're, basically hanging at the highs. Hanging at 622, hanging at 620. Still could go a little bit lower than here. Or you might get the third version of it, which is the very bullish FOMC trend, where you start flipping about a week or 2 before, you end up at a high, FOMC comes out while you're at the high, literally the all-time high, and you pretty much just change directions completely. It's almost like you fall off the side of a cliff that's right next to the ocean. It's very steep. So with the last 2-3 days, it looks like you were choosing the downside FOMC direction. But then, like I said, with PPI coming out today, the trend and the flow looks like it's switched a little bit, honestly. So it might be too preemptive in terms of my ideas. They might be a little too quick, a little too much. But again, I still want to see it. Still want to see if this idea is going to occur. If you want to play more downside, just remember, once you get below the red line or below the reversal point number 2, you could do so. Or if you run on the other side of the board, which is 625, 628, you can get your puts around there. But yeah, that's pretty much the idea. That's the idea, that's the concept. We're going to keep going over it like every 20-30 minutes, just so everybody can be on the same page. So far, this is a terrible uptrend. It's just killing all the value. Okay, so you're just getting more bearish here. You're now below the midpoint. You did flicker up above it. However, the main body of this candle could potentially still pull down below it, just like how it is right now. If you touch the line once more and you get bought up again from it, you might not go below it. You're just getting pulled around the map here. Kind of in the same manner we thought you would. However, this is a little bit a little bit more consolidation than I originally thought. Let's just say. Kind of funny, actually, now that I think about it. Stuck between the 5-day and the 2-week now from July 3rd. Hmm. That is another funny little thing that we can add here. I just realized that for all charts we're missing this one component. That one component is so I guess I'll call them points of interest for now. Okay, so it looks like we're going lower here, everybody. We're gonna give it a couple minutes and allow it to actually create some boxes. The next puts we're looking for, once you fall beneath the midpoint, is going to be puts to 621 first, and then 620 right after that. So remember the put plays that we're looking for, as long as you fall below 622.19 or 622.14, you want to look for puts straight down to 621. For now, it's still holding, unfortunately. What time is it? 10:42. Hmm. All right, everybody. I'm going to go for a little walk real quick. We're going to let this play out here. And then we'll come back in maybe like 10 minutes, 15 minutes, 30 minutes. And then we'll see how this play looks. For now, we're just going to give it a second. We don't want to touch nothing. We have an idea, and we want to see if it plays out right now. If it doesn't play out today, so be it. We'll see if it can play out tomorrow. Let's do this, everybody. All right, everybody. Looks like everything is speeding up now. So get ready. Get ready, everybody. I want to see it slam down even more to confirm the downside. I want it to get below 621.07. If it doesn't get below this, it's simply just telling me it's just going to flip dramatically to the upside. This is basically what I was looking for. If you can't get a move in the direction that you want the move to be in, oftentimes what you can get is what you're seeing right now. So it all depends on how the flow is just going to kick in now. You could just continue to fall out the sky here. Once you get below 620, you want to see if you can continue to fall to the floor, falling out the box, which is at 618. So you can start getting into more puts right below this. So far, that was basically almost an equal reaction perfectly. Yeah, this flow is, even this still right now, it's like it just keeps equalizing itself. So we're going to wait. We're going to give it a second. Now, since you're below the midpoint, what you could do is if it runs right back up to here, you could potentially get into a cheap put to continue to play the downside. Because remember, you could use that as a double point of confirmation where you can continue to go down to 620 or potentially 617. This is the bottom of the weekly, so we've been waiting for this to happen for a couple days now, as you can see. We've been drawing lines ever since you created that zone in the first place, and we've been waiting for it to pop to the floor. However, it just never wanted to do so. It just always wanted to continue to kind of hover at these highs. My thinking is just due to the fact that FOMC is just 2 weeks away, you're going to start getting basically a lot more buyers and sellers that are going to step into the market now. They usually buy stuff around 2 weeks before, 3 weeks before. So the market starts, basically increasing its momentum, starts becoming a little bit more wild, starts slamming around the place. And it's usually like right before that period. And I've noticed this for the last 4 years. So today, this year, of course, every single time we have FOMC, I always tell everybody, you could get a different trend, something that's more aggressive, something that's more consolidating, right? For now, all I want to see you do is play around with the weekly trend. If you're just going to do an equal reaction, and I'll explain to you what an equal reaction is right now. You'll understand it in a second. I'm just waiting for more price action to occur because it's still yet not equal. It's not equal yet. You're actually more bullish than you are bearish still. So I just want to see if they're going to be able to actually drop you out of it, do something that's more bearish than you are bullish. And then once I see that, then we wait for it to hit the 1/2 point. So currently, I think now you just did an equal reaction. Let's actually measure it. Now I can't tell. So up here. No, yeah, not yet. You have to hit 620 on the dot. So if you do not hit this bottom line, if you just get bought up from right here and you get sent to a high, you're still more bullish than you are bearish. If you fall beneath this area, you are now more bearish. Well, there you go. Now you're more bearish than you are bullish. So at this point, now allow the market to actually run all the way up to the halfway point, and we're just going to get some puts at that point. On the supply and demand zones, you almost hit the golden area too. You hit right around the quarter point at the bottom. So that's currently where you're at right now. So it looks like these are your supply and demand zones, the golden one and the purple one. This is your first time you fell below it. So we're going to use that as confirmation. As well as we all had to kind of think about what we talked about yesterday, which was the idea that you would fall from the purple after, opening up below it. You would then run up to it, fall below the purple. So as long as everybody was following this on one screen, while at the same time they were following me on the other screen, you're going to be able to see your weekly trends, which is this right here is your weekly trend, right? This was made a couple days ago. Whenever you're looking at reversal chart number 2, that's going to be your daily trend. By the way, you fell below number 4, and you're right by number 5 now. So if we can get below number 5, you could just instantly hop into puts, or just wait for it to retrace back up here, and then we'll get some puts to play the downside and continue to see if we can fall out the box here. Again, once you get below number 5, you can continue to play the downside. The new downside is going to be around 617, 615. So that's the next bit of downside that you're looking for. 617, 615. If it just holds on number 5, again, we bought right around number 2. We're not going to average down at all. So if you hold around, actually we can average down once right here. We'll buy a single contract. There you go. Okay, so back to what I was saying. If you hold at number 5, the one thing that you could see us do here is potentially run all the way up to number 4 or number 5 on the opposite side, which is, I know is you're gonna laugh. You're gonna laugh, and I've been laughing the whole entire day when I've been trying to calculate this. It's still within range. The first contract we bought. So it's kind of crazy, but let's just say a lot of value gets applied to this market right now. Let's just say, right? Because that was a lot of value within one candle. That's the biggest move I've seen all week. Number 1 straight to number 5. If you could do it that fast, well, think about it. We still have 12, 1, 2, 3. We still have 4.5 more hours to go before this market closes. If that value gets applied now and you get sent to a new high, because you filled the gaps pretty much. You filled all the gaps. You're even filling gaps from last week now, as you can all see. You just filled everything. So if you filled everything, that's okay. That's perfect. Let's see if this market's just going to start swinging you to a new high now, because you went to a new low. You finally hit 620. You finally hit 619. Let me show you the weekly chart so you can actually see it. This is the first time you hit this level ever since you hit this area over here. Even the next day on the 8th of July, you couldn't even hit this level because of how slow it was. So what we were doing down here was we were just buying nonstop. We kept buying at every single low, and when you just ran up to a new high, we were just selling out. So that's pretty much the same reaction you had so far right now. Not that different. You actually didn't even hit the damn weekly line. This is the midpoint, right? No, you didn't even hit it. You didn't even hit the weekly midpoint. This is the 3-week midpoint. So this is the one from the 27th. I thought you actually hit it. It's like cents off of it. It almost hit it, right? Let's see how much cents it is. So it's around 619.39, and then this line's at 619.45. So you could basically say it hit it. You hit the 3-week midpoint. You hit the 2-week midpoint. And you hit the 5-day midpoint. And you're cycling between them right now. So I can actually show you with this chart over here. Watch this. You ready for this, everybody? So again, just pay close attention. This is how a market usually always moves. It's just, it becomes so many like different lines and things on your screen that, no, yeah, I don't even want to look at this, honestly. When you just put too much stuff on the screen, so, but it's like you kind of have to look at it, you know what I mean? You kind of had to have all this stuff on the screen, because then you're just making yourself see things at a disadvantage. Alright, so look at this orange, look at the blue box, and then look at the orange box. Let me just make this orange around the top just like that. Actually, let me make this more visible so you can see the lines to go around it. Okay, so you can clearly see the lines. And then the next range would be down here. This will be your 3-week range. So then you're going to bring that all the way up to the top. You're going to bring it to the highest point, honestly. So you bring that to the highest point. And as you can all see, okay, so look, wait. I had to explain this because I can't just do that. So the reason why these, I didn't fix it and put it to the highest point was because when these were created, it was created using these few days right here. Just like how a couple days ago when you created this one, it was used creating, it was used with this day up here and then this pre-market down here, right? The reason why I'm using the low of here and the high of this range up here at the top with this blue box, I'm going to change the color to like maybe yellow or something. But the reason why I'm doing this specifically is just due to the fact that if I were to put this box, you know, right next to the range over here, this is definitely very helpful. This is definitely going to be an important level. As you can all see, it's actually right next to where the market holds. But what I want to see is not just an important level. I want to see how it can give us an equal reaction. So the only way that I can actually use a box theoretically to see if it's going to give us an equal reaction is to do two things. The first thing is just to bring it to the high. That's the easiest thing to remember. The more complex thing is just, of course, to copy and paste it like this. And it's kind of funny, but when you copy and paste it, you almost perfectly get the range. The reason why I wouldn't do this is because the data that was basically occurring over here, compared this data to this, you know, data down here. It's way more price action up here. So what I would want to do, honestly, is make this box include this crazy price action that occurred over here. Because now what I could say is, if it flips below this midpoint right there, let me color it so you all can see it. If it still flips below this midpoint right there, that very visible dotted line, you can get the price action that occurred up here, but beneath it. So you can get us having a crazy day, which is today. It's kind of like the decision day. Which side of the aisle are you going to end up at? And then once you end up on one side, potentially the downside, you could see this type of price action develop down here, but like opposite. So like you see how we ran up to the crazy high up here, 627. You could see us in theory fall straight down to 610. Potentially maybe 610 within 2 days, 3 days. So it might just be heading straight down now. So you could use this weekly midpoint for tomorrow to basically be like, all right, tomorrow it's probably going to end up opening maybe somewhere around here. And then it runs up to here, which is the midpoint. So basically it does something like this. It opens up here, runs up here, then falls right back down to maybe the quarter point here. Maybe it's like very bullish for some reason, right? And you run up to the high again. You buy more puts up here again, and then you try to see if you could play, you know, the downside out the box. So like in theory, what you're doing here is every single time you touch a midpoint or a quarter point, you're then drawing lines to potentially play the trend. So for right now, the current call play that I have, let me show you all again. I just deleted a chart. Give me 1 second. In terms of the current play, we're basically we have calls right at the midpoint. We have calls at the midpoint. You fell down to the 1/4 point. We want to see you simply run up to the next 1/4 point at the top. Because if you could just run up to the 1/4 point at the top, which is 624.17, we could potentially see you run up to the 626 high for like a little wick. Meaning for like 5, 10, 15 seconds, you might just pump up from 625.19 to 626. And that's all we're looking for pretty much. To continue playing the calls and to continue playing this upside. For the downside, like we all said, we're waiting for this thing to run up to 622. Because right now you're just trending a little bit more aggressively than normal. And when things are choosing directions, they do of course trend aggressively. Don't think that they don't. But there's patterns and there's confirmation. When it's wild and you're just basically touching the 8-day EMA and then you're getting shut down, to me, this still is problematic, you know? This still could hold here. If you're just going to continue to fall out the sky, just wait for it to get below a 1/4 point or a 1/8 point, and then you can continue to play it. It's just you got to be careful on days like today, you know? It's very aggressive. I remember we kind of knew it, right? Because PPI tends to be more aggressive than CPI. And just wait for tomorrow. Tomorrow you usually get the decision day. So actually not, let me not say that. Whenever you're by the midpoint of the weekly, that's your decision day. So today's kind of like the decision day, and we knew it was because of yesterday. Because yesterday was at the high. So usually when you get to a brand new high, you start crashing, especially when the market is this unstable. Got to the high, you crashed the midpoint. Today you opened up basically around the midpoint, but beneath the purple zone, which was perfect for us because we had a sell resistance point like right above that. So it just perfectly worked out with each other. You then hit the perfect purple zone, fell down to the midpoint, held, ran up to the 1/8 point, fell down to the 1/4 point. So that was the equal reaction. So right now you just basically confirm that you're more bearish than bullish. So if this market wants to actually confirm that it's more bullish than bearish, it would have to get up above this area here. So it needs to run up into here basically. If you're just going to sit at these lows and not continue to go lower, because ladies and gentlemen, I mean, you're just doing the same thing you did last week. You're still stuck in the same range. So until you get below 617, which is our next area for us to play puts, we're just waiting for this thing to trend here. So we got calls at the midpoint over here. Ended up working out. This was, what day was this? Last week. Slightly above the midpoint. Okay, so you're right back on number 5. What time is it? 11:30. Let's do some math here. Let's check contract values real quick. All right, so you've already entered slowdown level. Remember, we were talking about this earlier. Once you tend to hit a certain numeric number, around, you could say $3, around $3, usually you start slowing down. So currently right now we're around $5, which is just like yesterday. So we could probably see another $2.50 drop, which is basically going to put you perfectly, I think, at this next area here. Give me a second. Yeah, you're going to get perfectly put straight down to this next yellow line. So in terms of holding any more puts on the 5-day or the 10-day, what I would say is, again, just slowly see if you can actually move up your stop losses here for any of the weekly puts. Any of the dailies, if you're still holding them, 619 is basically the area where you want to potentially stop out here. Just got to be careful because of number 6 and number 5. What you should do here is you want to play for number 5 to number 8 on the reversal points. So these right here. So again, you're going to get bought up at around number 6 or number 7. And then you want to play to number 5. Or just wait. Allow it to run up to number 5. And then to continue to play the downside, you're going to buy the puts at number 5 here. And then you're going to wait and hold them until you hit number 8. So you're at number 6 now. You're slightly holding for a second here. You're almost at the bottom of the box, so this is perfect. So again, everybody, this is the first time you hit the bottom ever since you created this box. So to play more downside now, just wait for it to get below it. Don't wait for it to run back inside of it. Double point of confirmation, right out the box. So again, you've only done around $1.25. We want you to do $2 straight down, so we'll wait for you to get now bought up straight to the yellow line. Once you get bought up from this area, we'll then continue to play the downside right around 619.22. So right around that same area. $618.05, 624.13. Okay, so the puts that you're looking for are going to be the 516s, 515s. Again, you're going to look for the puts right around number 5, so right around here. Just make sure you market fill. Do not enter a limit. Whenever you trade with a very quick market like this, it's always market fill. So you would market fill into some puts now. If you instantly get above this pink line here, you want to just stop out. That pink line right above you is going to be your stopping out point. So again, everybody, if you get above that pink line right there, just make sure you stop out. The next location you have for another trade is going to be to actually wait for this thing to fall below number 5, because if it's above number 5, what that means is just simply the market could flip, unfortunately. It's like one of the most confusing things in the world with SPY. However, it's one of the funnest things to trade. It's one of my favorite trades, honestly. By the way, we're still actually trading a flip upon the whole entire reversal points. So we're waiting for you to actually run up to 626, 627. That's what we're waiting for. So yeah, this is the most extreme way to play the reversal points, honestly. But again, it's, like I said before, it's the best way to learn. So far so good. Just wait for it to get below number 5. Alright, you're above the pink. So yeah, this market's just all over the place still. you could still flip here. Think about it. Just one candle, you just ran up $2 within like 10, 5-10 minutes. Let's just say 8 minutes, 7 minutes. If that's still the case, this reminds me of 2022. Let me tell y'all. In 2022, think about it. I had no group to trade with. It was me trading by myself. And at the time, I wasn't really trading with money I should have been trading with. I was trading with money from loans. So, yeah, it was a little stupid, I would say. But at the same time, it taught me a lot of valuable lessons. Right around CPI and PPI, I would always try to trade those days like a normal day. And I would always get screwed. Like the normal way I would trade, like any other day, compared to, CPI or PPI, it would always go my way almost. But whenever it came with the news days, it was just too extreme. I didn't know what was going on. I was losing a bunch of value. I was trying to play both directions, at the beginning of the day. I would have probably stopped out because of this morning price action right down here. So it's just a little bit all over the place. And I don't like that, because what occurred this one day when I was trading was at the open, you had done a $7 drop out the sky. You ran up $7, $6 something cents, and then you continue to fall another $7 out the sky. So it fell down 7, ran up a couple dollars, then fell down like $9. At this point, you're basically down $15. And it's only around like 10 o'clock, 11 o'clock. So I was like, all right, what in the world is happening here? It looks like the market's breaking. I wait for around 3 p.m. Not 3 p.m. It was around maybe like 1 p.m., 12 p.m. And for some reason, whether it was a report coming out, whether it was something that happened with CPI, because I remember this happened 2 times. One time with Powell, where a report came out, and I think that was like a $24, $25 day, $20 day. And then there was another day where it was a PPI or CPI day specifically. It was probably a CPI, I think. But you did 15 down, and then you did 30 right back up the same day. And obviously, by that point, everybody was already selling out their contracts. They weren't in the market no more. So, yeah, pretty much not many people really even claimed value because they were already selling out. What I'm trying to say is, let's see if this is going to flip to the upside. Because if it flips to the upside... if it flips to the upside and you hit number 4 or 5 on the reversal points, just because of how we're positioned still, you're basically going to be up around, you could say, $4,000, $5,000 from $400. Just because we have 30 contracts. So we'll see. We'll give it some time here. If it just sells right back off to the bottom, every single sell-off we get, the dream dies a little bit more. So what we're going to do is we're simply going to play the idea tomorrow. The idea is to basically play for a crazy jump to the upside, just using the weekly trend. Because right now, as you can see, you fell from the little 5-day trend you had. And right now you're listening to the 3-week trend. So if you're breaking out of the 5-day, you're breaking out of the 1 week. I mean, you're holding the 1 week, which is basically till last week. Right, today's the 16th. So technically last week is like the 8th and the 9th. And if you look at when this box was created, it was right around the 8th and the 9th. Basically around the same area, right? So, yeah. That's pretty much all the different areas you have to watch out for. The next thing I would say is this area down here. So let's just say we make a box down here like this. And then we bring it up to the absolute high like that right there. Let me make sure that's at the high. There you go. So when you bring that to the high, you basically could see that the midpoint is going to be right down here at 609. So for tomorrow, if we're just still at these lows, first thing is, of course, to play for a new high for you to run up into the 626 area because the ranges are expanding. And then the next thing is going to be to wait for it to get below 617 and then we're going to continue to play the puts to 610. By the way, for a lot of you newcomers, right? The one thing I want you to understand is that you're probably not going to understand a single word that comes out of my mouth right now. I might be speaking too quick, or the market movement might just be it might just be a little bit too all over the place. And again, I don't blame you for that. Don't feel like you're less than. Don't feel like you can't understand this. It's just going to take a couple tries, and you just need to take notes. I used to take a lot of notes around CPI and PPI, so I almost perfectly remember what I was doing in 2021, 2022. And it was kind of sad. I'm not gonna lie to you guys, because I was taking notes to people who weren't even reading it. It was just the friends. I had like not even friends. It was just people who I knew that were around the same age as me that I was trying to help out, because I believed in helping out people my age first before I tried to help out any other person. But it didn't work really well. It didn't work really well at all, honestly. It probably was due to my speech and how I was talking. I couldn't really speak correctly to these individuals to make them like understand what I was doing and understand how they could do it. But the point that I'm trying to make here is I was just speaking out into the world and nobody was reading it, but I was still doing my notes, And once I started doing like a year of notes, 2 years of notes, like around 2022, the problem is that I wouldn't read the notes back. So I would just do my notes, and then I wouldn't read it back. 2023, right at the beginning of it, that's when I actually started reading all my notes from the last couple years, and that's when everything clicked. When I was actually reading through all the different notes from every single day, you had to spend like an hour or two, of course, going through all your notes. And yeah, I would say it was around that point that it clicked for me, where I was just like, all right, now I can see what they're doing here. It either evolves into this type of day where you end up doing this type of a trend. It evolves into this other day where you do this type of a trend, or, it could be something completely different. So like days where you end up making a low like this, but it doesn't go into a new low on the weekly, if you just get bought up, you could literally see a swing to a crazy high. So we bought around the midpoint, of course, but because of how fast you fell down to the bottom point, it now opened up more opportunities for contracts that basically were dead already. So because our contracts were already dead by the time you fell to the floor, you holding here and bouncing up so quickly, if you're above number 4 on the reversal points, I'm just letting you guys know, be very careful. It could fall from number 4 to 5, of course. I definitely agree with you. But if you're above number 4, just be very careful. That's usually where the buyers start stepping in. So far, so good this week. I'm loving this. We predicted to drop out the sky. We predicted that you would run to a new high and then fall to the floor. So now let's just see if we're going to predict you being able to actually speed up again with the momentum and run into a new high. That's all I want to see right now. I'm telling ya, I would run out the house. I'm dolphin diving straight out the window. I'm not even going to open the door. Just straight through the glass. So let's see. You guys excited? You better be excited. You guys are probably a little worried by now, which is all right. And then tomorrow, once we get this price action to settle down a little bit, after today's done, tomorrow we'll see if we can just play the consolidation. It might choose a direction, which is the only problem. Usually Thursdays are your consolidation day, but because PPI is the day before, what we're going to do here is we're going to look at all the PPIs that ever dropped in the last 4 years, and we're going to find all the times where it fell on a Wednesday, so that we obviously know what to do for tomorrow, which is Thursday. That's basically how you can understand how to trade market flow. You literally just look at the last 5 years, 4 years, because that's where it was the most important. 6 years, 7 years, I wouldn't say look at that because nobody was paying attention to it. Which is actually, I guess you should look at it because that's probably the data where they didn't really corrupt that much. I feel like they corrupt more data now, honestly. So yeah, let's just wait and see, everybody. Remember, when you're getting into puts, especially on PPI day, the one thing you want to understand is that it's going to be very hard to trade them. The times that you get out are going to be right before the market accelerates. So what I want you to first think of when you get into puts in a market like this, where it's just zapping out the sky, getting bought up, staircasing, and still falling down lower, is you're only going to sell when the market starts speeding up with a big candle like this. So meaning you would wait to buy at a certain reversal point, right? So just, again, wipe your brain, wipe your mind, and might be stuff all over the place. The first thing I want you thinking right now is when the market hits a reversal point, you're instantly, no questions asked. You're not looking for this. You're not looking for that. The second it hits it, you instantly buy into a put. So like, let me give you an idea. For instance, if we fall down to number 5 here and you hold, the next thing that I would personally be looking for is you to run straight up into the sky. The reason why is because if it managed to get below number 5, which is a very important point. Why is it very important? It's because of the amount of dollar for dollar value that this is from the opening price. That's all I'm going to say. If you would like to learn it, of course, you're going to find the videos in the Discord to help you understand this trading style. This is your most sophisticated trading style for SPY. That's the reason why I just held right here perfectly. You did fall in between 6 and 7, but at the same time you held on the orange line perfectly, which is your midpoint for your next range. Now, if you held on that orange line, what that tells me is that you're just going to run back to this red line here. How do I know that? Because if I just go back to the left side real quick, every single red line and orange line has a circle, meaning it's a magnet point. Now, the reason why this is so different compared to any other person that you would obviously see make lines and make trajectories and stuff like that is because these lines, they come in at an angle. You never really see people ever on YouTube or the stock market or on any forums or on any subreddits. You never really see them trade with diagonal lines. And I feel like that's where they start having their shortcomings, where when you have the diagonal lines, you can see the bigger picture, but again, diagonally. So what this means is if you can see the bigger picture horizontally, which is 622, 620, 618, 619, the market's getting accelerated again. Oh God, don't tell me it's happening. Don't tell me they're gonna do what I think they're gonna do. There's no way. There's no way. Don't tell me. I'm gonna jump out the window, I'm telling you. You're gonna hear glass breaking in the background. Just give it 5 minutes. Again, this will be one of our most insane trades we did all year. Let's give it a second. And then we'll continue talking if it slows down again. Because talking helps ease the tension, you know? You see how I ran right back to that red line, everybody? You see how you see exactly what I was talking about happened? That's why we pay attention to these lines. Just because of that. So if you continue to speed up here, you're going right back up to these orange lines up here. And oh my goodness. Get above the red line. Come on, get above the red line. Do it. Apply the value. Come on, SPY. Looks like you're selling off by the red line. No. Oh, man. Let's see. Let's give it some time here. This could be a super trend to the downside. You could fall right back down to a new low. So if you guys want to get puts here, buy, market fill, market fill, market fill. I'm telling you, buy a put right now. Everybody buy one put right now. Just market fill. It doesn't matter if this continues to go up higher. Just market fill right now, just in case this falls down. This is literally gonna fall out the box again and go even lower. So market fill a put $20, whatever you could buy it for, $10, $19, whatever you want to buy. Just buy one of them. Buy a single one. That's all you need. And I'll tell you when to sell it. If we just continue to head up higher here, remember, I still have calls. The whole entire day I've been down on my calls. I went down 90%. Now I'm only down 30%. I'm still holding these calls. I want to see if I could sell this $400 out at $2,000. So we're still going to wait here. But if you guys, again, want to listen to the flow, get a put, just hold it. I'm playing more aggressive. I'm playing for like a weekly trend. I would rather everybody else here play the daily trend, which is you could potentially fall to a new low. It's more safer. The weekly is going to be something that occurs, if it wants to happen now, if it doesn't want to happen tomorrow. You know what I mean? So, yeah. But this is exactly how you're going to end up. Unfortunately, it was so funny because the puts ended up going to the same amount that I wanted the calls to go up to. So this always usually happens with the ideas. Let's just say you think one day is going to be very aggressive. You tend to have a situation where if, let's just say you're playing calls, the value that you think you're going to sell them out at ends up being something that the puts hit. And oftentimes I find myself dealing with that with 0 days, but it's mainly because I'm looking at a 5 to 10 day perspective, while the 0 days are 0 days. You know what I mean? So it's like it's looking at the 0 day perspective. So you got to factor that in. And when you're trying to really, end up going 1,000%, 2,000%, the only time you really do that is when the weekly and like the 5 day, the 2 week matches up with the 1 day. It's like everything matches up perfectly. So just because you hit the bottom today, that's the only reason why I think more value just got applied to the market. But I know they could drop you to a low. I know they could make you fall out the sky again. I've seen this happen multiple times before, where every single time it runs up, I'm just like, now it's going to happen. It's going to happen now. And then it never happens, right? The upside. That's why I was saying there's no way they're going to do this. There's no way they're going to send this into a new high, because I'm holding until you hit 626. If we don't hit 626, I'm going to sell out of everything for a loss. And that's it. That's the decision that I'm making. That's the only way that you can actually end up, moving your account in terms of a large percent. And right now, the only thing that I would be happy with is a large percent. So the only way that something like that can happen is if you run up to 626. So for everybody else, I want you to be able to play something that's more realistic, which is just you basically falling out the sky, because now we're choosing downside. And that's pretty much your full picture-esque type of point of view. That's just, dotting from line to line to line and organizing everything in a proper fashion. Because remember, you don't want to get confused. It's a lot of trends that are occurring. If you want to actually learn how to trade this market, the first thing that happens to you should not be, you feeling overstimulated or you feeling like this is too much. If you feel like that's the case, just take a break. Take a walk, just like how I do it sometimes. And, just become a little bit more clear-headed and then start thinking. Remember, you should not be feeling overstimulated. You should not be feeling like this is too much. You should not be feeling like, oh my God, I can't comprehend this. Do it. Do it if you want this. If you really want to change your lives and you really want to make this happen, you have to understand this. So it's not a matter of if, and, or, but. It's a matter of you jotting down the notes, replaying this YouTube video whenever today's done, and you making it happen. Because literally just one contract for the put side, if you would have understood my perspective, why I told everybody yesterday to buy puts at the open of today, you would have been, just look at those puts. You all see that, right? And you all understand I told you that yesterday. We're going to buy puts as long as you hit the purple zone and you fall from it. If you want to see the purple zone that I'm talking about real quick, it's this one right here. So I told everybody yesterday, because you were playing around with the purple and you fell from it, this was a really good drop. The next day, I want to see it hit the bottom of it and then fall from it. I want to see it fall down to the yellow Once it hits the yellow zone, I then want to see it get instantly bought back up. And look what happened, ladies and gentlemen. Look at how ridiculous that is. This is why I colored these zones just like this. So you know what we could do now, right? All these orange zones, they're all nonsense now. I don't need none of them now. Because now I know that this is the yellow zone. All these zones are disappearing. And finally, we have a proper way to trade this new upside here. This is where it gets fun. So again, you fell from you hit the yellow, straight up to the midpoint. You almost hit the quarter point, and then you fell back to the midpoint. If you hold this midpoint, what's going to simply happen here is you're going to run up above the purple point and end up doing an equal reaction to what the yellow did, which was you're going to slightly get above this purple point here to 625. I hope it happens quickly, because if it happens quickly, we could sell out of our contracts at a really nice gain. If it doesn't happen quickly, again, we're just going to take a loss on these contracts and walk away. And then tomorrow, we're going to play the same idea with a day that's a little bit less aggressive. That's the reason why I don't want nobody to feel emotional. Listen, if the trade doesn't work out, it doesn't work out. Don't feel emotional. There's no point to feel that, honestly. The universe is always going to give us a lesson, and we're going to figure out what the lesson is that the universe is trying to give us, and that's it. If it works out, it works out. If it doesn't, it doesn't. We'll play with another day, which is more reasonable, just like tomorrow and Friday. I doubt Friday's going to be reasonable, but, you know, you understand where I'm coming from. You get it. Alrighty. So we'll give this a moment. So far, it's not that bad. Alright? It's not that bad. It could be worse. It could definitely be worse. But it could be better as well. The Nvidia contracts are slightly going up higher, but you're just holding on Nvidia. So we might have to stop out of these September options and then just buy a new set of Nvidia contracts for the downside. They're losing a lot of value for some reason, even though you're only moved up around like $4 or $5, which is not too much, honestly. It's like a little weekly, trend. I guess you know what it was? It's probably with how aggressive the market's just been moving in general. Every time you breach into a new high, even if it's by $1, it tends to just get just a little bit, you tend to get a little bit more momentum than normal, which is like just insanely aggressive for some reason. You just start jumping into these crazy new highs. Like, I did not honestly think SPY would get above 613. You even getting to 620 was a big shocker to me. And now, since you're at the low of 619, 618, today could be a day where you literally run up into the new high, which is so random, but that's also another thing that I didn't tell you guys. I was kind of saving it for the end of the day to see if it actually occurred. But you could literally run up into a new high. And the reason why I say that as well is because if you zoom out right here, let's just hide everything for a second. So multiple times before, whenever you would fall, you would run right back up and you would hit the same high, if not a higher point. So of course over here, you hit a low. Now all I want to see you do here is just pretty much run up into these highs here, which might be a little aggressive. I agree with you guys. I agree with all of you. However, it's definitely a possibility that you can do here. And as long as you can run up into a new high that's higher than the opening price, we could then get some puts for you to fall right back down on the 5-day scale. That's basically what we could do here. If not, this market's simply just going to hold right there. I'm thinking it should fall down to like 598, 600 flat. It should fall down to here. Because think about it. If you create a line from, let's just say these lows right there, and you go like that, it looks like you're supposed to touch like somewhere down here, like 611 or something like that. So I definitely agree with that. You could definitely touch 611. It's just this market's way more bullish than normal. So until the bullishness changes and I see you not make new highs, because you're just still running up into new highs right now. I mean, just look at that drop out the sky. Everybody who had puts instantly just lost all their value right there. So all we're going to wait for right now is you to get below number 5. If you're above number 5, and we're going to start looking at some other companies now. But if you're above number 5, you're just going to be able to run up to the next side of the reversal points. So you just have to pay attention to that. That's all I want every single one of you to know, is that you could flip on the opposite side of this board, and these contracts could be worth $2,000 to $4,000 or $5,000. We have to wait and see. If not, it might just be worth nothing, you know? You might just lose all your value, and that's pretty much it. We'll try tomorrow, see if you can run up into a new high on Thursday going into Friday, and then, yeah, that's all. So we're gonna do. So far, it just looks like a very bearish day, because you did more moves to the downside than you had done to the upside in terms of the DARP. So, and of course the weekly range, right? You're right at the 1/2 point. That's the reason why I had you guys buy into those puts there, because you just want to generally hold them. Just give it a second, see if it's gonna fall into a new low. For everybody who's buying into the calls, you're waiting for this to run up into a new high. So again, it's either going to drop straight down to 620 here, where you could then put your stop loss, or you're going to run right above into 624, where we could then sell the calls around that time and potentially look at more puts for like the 5-day, right? Alrighty, everybody, let's give it a second here. We got to make sure everybody's eating. Come on now. Everybody here has to be making some good profit. Miss Michelle, so the one thing you're not understanding here is that in order for you to actually take $100 to $1 million, you need to be able to trade aggressive trends. So if, let's just say, ideas that we've been coming out with from the past week were all working out in our favor, right? Meaning every single day we went up 100%, which was the case. Today, the only thing we're looking for is the weekly move. We're not playing the daily move no more. So we're looking for something more aggressive so that we could turn a smaller amount into, a higher amount. I no longer want 100%. I want 3, 4, 500%. And when you're looking at 3, 4, 500% trades, it's a whole different perspective. So again, what I want you to understand is that you're just trading with supply and demand zones. So as long as you're trading with supply and demand zones, you would understand that you fell from purple to gold, correct? And then you ran from golden to basically in the middle of the purple, correct? So as long as you're following that trading style perfectly on your side of the aisle, you're profiting. On my side of the aisle, I'm being a little bit more aggressive because I want a bigger gain. So I'm not looking at the same things you're looking at. Does that make sense? There we go, Meech. Yeah, whenever you get a chance. Whenever you get a chance, Meech. Excellent. Excellent trades so far. You got a bunch of calls, got a bunch of puts. Excellent. Excellent, excellent. 168%, 54%. There we go. I'm trying to learn how to build a desk that has like a little glass door in it. I want to see if I can have like the PC like inside the desk instead of the PC being on top of the desk. But I feel like maybe it's just gonna be a lot more dust. It's probably gonna be way more dust inside of a desk because it's like a bigger area. It's not that hard to build, but if you try to buy it online, it costs like I think like 1,800, 2,000. But if you build it yourself, which is, you know, way more fun, let's be honest here, it's definitely gonna take way more work. But not, yeah, I feel like it's, you know, like literally like $300 you could spend. My desk, there's a funny story that goes along with my desk. I don't know if I ever told you guys this. In like 2022, 2021, I had so I was playing on Robinhood, right? And this was a whole different CPI day and PPI day. This was like a news day. Around 1 p.m., Powell started speaking, or 2 p.m. And on Robinhood, your contracts get sold out automatically at 3:30, right? So around 3:30, my contracts got sold out, and Powell started basically bringing up the information that I wanted him to bring up, which was about unemployment. It was about talking about certain, you know, attributes of the economy. It's just before that moment, he didn't really mention it. At that moment, at around like 3:35, 3:34, he started mentioning it. Tell me how the market starts running up into the sky. And because Tesla relies on interest rates, right? I was playing Tesla at the time. I was playing SPY and I was playing Tesla, both at the same time, which is stupid. You don't really want to do that. You want to play one or the other, or you want to play them opposite to each other, because oftentimes Tesla and SPY do not move together. Sometimes they do, like on crazy days, let's just say, where you're moving up $30, $40. But most of the time, they usually don't, right? So I was playing both of them in the same direction. I was playing for upside. And the contracts automatically sold out at around 3:30. Tell me how my contracts for Tesla were around $70, right? At around 350, they were around like $360, $400. The SPY contract was around 50. 20 minutes later, that thing was around 250, 220. So like everything went up times 4, times 5. And I was trading with my cousin at the time. We both got kicked out at the same time. And the market continues to go in that direction. And it was ridiculous. So, no, yeah, that's also another little mishap on a news day. But I would say those are more fun than normal, because you're normally not going to get to see value get applied to the board besides days like those days right there. But yeah, the next thing we're looking for here is you to fall from this 1/2 point straight down to the 1/4 point. You want to fall down to 620, and then we want to see if you can fall outside the box. Give me 1 second, everybody.